Hey everyone, I'm Jen. Welcome to another episode of Blockchain Banter, Mastering the Market. I've got Keith Allen, co-founder of Material Indicators, TA and algo trader, order book analyst, all of the above, along with Crypto Koryo, data scientist and narratives trader and Dune dashboard magician, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you guys so much for joining me today. Love doing these weekly calls. Keith, I kind of wanted to switch up the order a little bit today. Maybe you wouldn't mind sharing your screen, starting us off a little bit. I see my feed having all sorts of mixed emotions because we are down maybe like 6%, 5%, something like that. I don't know. You tell me. Let's see what the latest is.
I feel pretty good about it. I don't know about you. How you feeling about that, Mark?
I'm totally fine with it.
Yeah, I thought so. Oh, you know what? Really quick, I just want to tell some folks that we are live. Let me share this link real quick. Sorry, I didn't do that
Go for
before,
it.
guys. I'm hope everybody had an awesome holiday weekend. For those that, whether you celebrated or not, I hope you at least got a day off and some time to do some fun stuff. And we did. We had beautiful weather and got to go out in the boat and have some fun with the girls and
Nice.
all good, all good. So we want.
Time out on the water is always magical.
Yes, and I'm so lucky. We live in Miami. I have Biscayne National Park is in my backyard, so I'm literally, 7 minutes to the boat ramp from my house. So pretty happy about that. Yeah.
While you do that, I was just going to congratulate Mark really fast. I saw the announcement this morning that your our Fastlane bot, your trading bot, just went live on Mantle officially this morning. So congratulations on that.
Officially and finally.
I think that's what, 4th or 5th deployment that you guys have had of the ARB Fastlane the last couple months. That's awesome. Congratulations.
Thank you very much.
That's great.
We'll touch on that a little bit later if you don't mind.
That is awesome. All right, so let's get to a screen share that you guys have asked for. So let's present.
You going to show us your fire charts?
I am going to show you some fire charts. Beautiful. And I'm going to show you. Geez, where is it? Okay, this screen.
Okay, I see you. Bringing you up.
Okay, so yesterday, let me just push a little contrast here so it's a little easier to see. Yesterday, after we had a monthly close, obviously, was significant. Were we going to get green close? There's, the 7th consecutive green monthly candle. That was all historical, but, quite frankly, all that really matters is where does price go from there, right? So, we did get some signals that indicated the price was going to come down. We saw that on the monthly. We saw it on the weekly. We saw it on the daily. We pretty much saw it in every single time frame. So no surprises there. We had a trend precognition signal down here on the A1 algo, and then on the weekly, we see it on the A2 plus algo, and of course, we're seeing this breakdown happen here. I had been looking at these levels, and not sure why they just all disappeared. But we had key levels marked here. That's wild. They're gone. I must have hit something while I wasn't paying attention. We were looking at basically the higher high, the all-time high, where the monthly close was. Let me clear this out so it's a little cleaner. Where the monthly close was and where the potential areas of resistance and support were. Oh, I see what happened. My chart has changed.
Now, we don't look at the indicators very often, Keith. We tend to look more at the fire charts and stuff. So it's nice to see the different.
What's useful about this is, obviously the indicators give us some signals, but what was really great coming into the monthly close was the confluence we had between the technical levels we see on the chart and the liquidity we see in the order book. All right, this is where things really start to come together for me, and why, Mark and I, all three of us, often say, don't rely on one thing, right? Find a vector between your sources of data, and we could see we had very strong resistance overhead, and we had some support here that was keeping things elevated. But things started to break down after the monthly close. Okay, so we did get the green close, but price started to deteriorate rapidly on Saturday and Sunday. We had support staying in the range, and they kept price up. But as soon as that candle closed, we started to see things break down. And after the initial breakdown, we saw this ladder of bid liquidity come in. And that's what I was just showing you here a second ago. We saw this ladder, and it was about, I'm going to ballpark it at around 150 million spread between here and really about the 62K level. And then this morning, I woke up to alerts going off and a new secondary ladder stacked in here in the, in this lower range, which is 59 to 62K. Why is that important? That is important because that, my friends, is where our lower low lives, right here. And we have talked about, what corrections would look like. We talked about what the history of deep corrections, even in bull markets, even just ahead of halvings, even right after halvings. And there's, no denying that we have got a history of 20 to 40% corrections. We've seen it time and time again, and I'll illustrate it again quickly for anybody who hasn't seen this on any of our previous streams. But we have lots of history with this happening. So you can't say, oh, it's a bull market and we got the halving. Who's selling? You know who's selling? People who want to buy cheaper. that's who's selling. People who think things have gotten toppy. People who think that straight lines are not sustainable. That's who's selling. So we've alerted people to this for as long as we've been doing these streams. And so you should not be surprised that it's happening. And, if you are, I'm sorry, we've done our best to alert you. So then we look at, where can we go from here? Obviously we have these key levels of consolidation that we've been interested in. And we have, confluence in the order book on where that liquidity is stacked. So if we were to get down to this 59K level, that is exactly what a 20% correction looks like from the current all-time high, which is now at around 73.8K, down to that level at 59. There's your 20%. If we print a lower low, then I'm starting to look into these lower ranges. I would first look at this 50 to 52K range where we had some brief consolidation. And if that doesn't hold, well, where we go from there. Dream target down into this 44 to 45K level. And notice something here. We now have confluence at this range with the, we have basically the 50-day moving average here as a last line of defense before we get to that lower low. We have the 100-day moving average, which correlates at the moment. And these, of course, change daily, right? Everything's moving. It's a moving organic target. That correlates with the 50 to 52K range. And if you lose that, then, we start talking about this 40% move down here, which correlates with the 200-day moving average. So this is all very interesting to me, but what is going to ultimately give us the best clue, because lines are subjective, TA gets overshot sometimes TA just gets obliterated, right? Especially when there's manipulation happening in the market. But what we can see here on fire charts is where the liquidity is stacked. And historically, we have seen that the brighter spots win the battle. All right. So the brighter spots equal more liquidity. And I can, I'm filtered here to highlight things a bit. But if we go out to the longer term chart, even to a 3-year chart, you can see that historically, it's like moths to a light bulb. Price moves in that direction until it can't penetrate, and then it gets rejected, right? And that works in both directions. Had a rejection from up here. This was the highest concentration of liquidity. There wasn't enough below to support it until we got, some more concentrated liquidity below it. Then we bounced. It happens in both directions time after time. The brighter spot wins the battle. And where you really see the best bounces come from is when we have concentrated liquidity close to the price range, close to the active trading zone, and depth below it. So right now we have this kind of this depth ladder, but we don't have anything below it. So what I'm looking to see is, where does the bright spot, when do we get some brightness on this side? It's easy to see that the upside is dominant. Resistance is way stronger than support. In terms of what this liquidity adds up to, at this point, after we got this bid ladder in there today, it's quite similar. All right. But the difference here is the concentration that's right here. All right. This is only 67 million in this one spot. But if we stack these together, we're now, upwards of 150 million. And so same situation down here, and that we have some decent volume spread through the range, but none of these are concentrated enough to be a backstop to hold things, right? This is where you hold. This is where you keep searching until we see some sentiment. If liquidity equals sentiment, we need to see some sentiment like this around here. And until that happens, we're still looking for the bottom. We're still looking to validate the RS flip. We never got that validation. In my opinion, we never, ever retested this range. We just shot straight through it. We got one retest here on this 58 to 60. We could debate whether this was close enough to be a test or not. Fine if it was. I'm still happy to see another retest, because we came close to getting that 20% move, but we didn't quite get it. So, let's see how things continue to evolve. I think it's a time to not panic, because I think there's pretty good consensus in the market that eventually, post halving, we are going to see price appreciate again. But I think that too many people just think that, oh, here's the halving, here we go. It's not happening that way. And it's, if you're still in the up only camp, I can't do anything more to dissuade you from that mentality. Yes, long-term macro view is quite positive. I think, I'm as bullish on Bitcoin as I've ever been. But you have to understand that there are no straight lines, and that we could chop, a consolidation in this range would not be horrible, right? It's clear that support at that a resistance support flip at 69K, the prior all-time high, did not hold, right? Failed attempt after failed attempt. Briefly up above, one full candle body above, and then here came the weakness, here came the breakdown. So it's clear at this point, we've now invalidated completely multiple times an RS flip at 69K. Now we're looking to validate an RS flip at 59K, at 60K. All right. So consolidating in this range is quite healthy. Whether we break out before or after the halving doesn't really matter to me. I'm patient. We got to start printing candles, full candles above this 69K level, which was the prior all-time high. And then work our way up to this level. So yes, we'll be printing new all-time highs eventually, but it could take months for us to get there. Might happen fast, might happen slow. And then in terms of real price discovery, I don't think that happens until we get above this lifetime channel. This is the glass ceiling, in my opinion. We could chop up this way forever and still be making money and doing well in this market. But
that's about 80,000 that you're pointing at right now. 80 to 100.
This right here on the halving, as a matter of fact, the halving intersects with that channel. And again, these lines are subjective, right? This is how I drew mine. You draw yours however you like, but this correlates with 80K. The numbers kind of line up nicely for me. So that's what I'm looking at in terms of liquidity. Back on fire charts, we can see, there is some resistance at that level. That's it's not only psychological, as the 10s and the 5s tend to be, but because we see this structure here, it's also technical. So that's a valid target for me, and quite frankly, a logical place for a rejection, to run into resistance before we climb back out or get a chance to break through it. So that's in a nutshell what I'm looking at. The one thing I will say about targets in both directions is, I say liquidity equals sentiment, and at the moment we don't have sentiment for anything in this 44, 45K range like I talked about, and not really much in the 50, 52K range. But nothing changes that like price. So if price comes down to this 60K level, and we print a lower low, I would expect to see liquidity coming into this place, into this range very quickly, and then it's going to be range by range. If this doesn't hold, same thing, right? So that lower low to me is the most critical level on the chart right now. This needs to hold, otherwise, expect to grind lower.
59-ish, otherwise down to what you thinking, that 40% you mentioned
Well,
earlier?
I
Possibly?
think it's still level by level, right? And
Yeah.
and so we did have some consolidation here in the 50 to 52K range.
Right.
And we never retested it. So that's a viable target in my opinion. But there's just no liquidity right here at the moment. So all the sentiment is right here.
Keith, question for you. Before we pass it over to Mark, we're talking about liquidity and sentiment, right?
Mhm.
We're talking about the placement and
Right.
like the weight of it, right? But what about new liquidity coming in, or seeing less liquidity in the books? Does that play as much a role right now, or is it really just the placement
Well,
of these
you're
orders and the
always listen,
liquidity?
you're always interested in the total volume in the order book, right?
Right,
And more coming in is a good thing, and liquidity leaving is a bad thing. Quite often, we're just seeing it move around, right? We're seeing the same players move around. I haven't done a deep analysis um, on how much of this is new at this point, but I can say that often when it's being moved around, we can see it coming from one place to the other. This
right,
does not look like it came from one place to the other. It looks like yesterday's bid ladder was new, and it looks like this is also new.
nice,
Could quite possibly be the same entity, no telling.
right,
But these look like new placements of liquidity. And the other thing I would say is, since January, we've been in dare I say the word up only mode from the ETF for after that initial dump, and it's 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 evident to me now at this point that things are starting to level off a little bit, right? So yesterday we were net negative flows on the ETF, and to me this doesn't mean that sentiment is wavering on the ETF. It means to me it's a sign that that institutional market is evolving, and now rather than just euphoria and FOMO, they are now advising their clients that, hey, let's just cool off, and things are going to trade, and we're going to let these ETFs trade relative to Bitcoin rather than be the driving force behind Bitcoin. That's what it
right.
seems like is starting to evolve for me. But time will tell.
Time will tell. Thank you so much, Keith. I love following along here. I'm so glad that we switched to this format. I
Yeah,
really am.
it's amazing for sure.
Mark, I'm going to pass it over to you really quickly. First of all, I'm I'm thinking you're probably kind of in line with Keith here in terms of we're due for this sort of correction, right? Um, Do you have any thoughts on that before we speak about kind of creating a hypothetical strategy on chain with the sort of things that Keith was just showing with the indicators and the fire charts?
I mean, yeah, if we're creating, a position on chain, obviously the Bitcoin wrappers on Ethereum are very deep and are extremely useful. My preferred wrapper for Bitcoin is a coin called TBTC, which is much more decentralized, much more trustless, much more robust than things like wrapped Bitcoin or WBTC is. But both of them are okay. And if you were going to trade this versus the US dollar, and a lot of Keith's analysis is geared in that direction, I would be paying very careful attention to the technical levels that Keith is pointing out. As Keith said, and I think rather astutely, that it is kind of subjective where you draw these lines or where you draw these trend lines. I have a similar ascending logarithmic channel that I use to kind of work out when I think Bitcoin is a low risk buy. And the bottom of that channel for me is sitting somewhere around the $43,000 level, but it begins at something like the 54-ish, 55-ish kind of level. And this is the trick, right? Because if you put all of your eggs in one basket and say, look, everything is too positive, maybe we'll touch the top of that channel, but we're not going to come down to the bottom of it, and put all of your all of your chips down at that level, and it goes lower, you're missing out on being able to buy potentially 20% cheaper Bitcoin at some point in the future. Whereas if you do the opposite and put all of your chips down at the 43-ish kind of level, then if it never gets there, then you never get to buy anything. And I think that this is the problem with having price targets. And I think that it is a very wise decision to kind of not trust yourself and to have ranges of bidding and asking liquidity commensurate with whatever the price targets you have, with some sort of error bar around them. And so, yeah, to set up a strategy like that, let me show you what that would look like. Let me know when you can see the screen.
There, we can all see it, right?
Perfect. Okay, let's try and create that strategy. So I said TBTC is my favorite Bitcoin wrapper, as I think it should be everyone's, but to each their own. And let's trade that against USDC is becoming sort of the preferred trading pair. But USDT or DAI or something is fine. You know what, let's do, I'm speaking about trustlessness, so let's go with DAI. Okay, so
you blew past that. So there are different really limit order. Okay, so different strategy types. You're choosing just a plain limit order.
Well, yeah, usually, yeah, so you can choose them here, but you can also choose them on the next screen as well. So I usually ignore this part. But yeah, so we can, you can either place a single limit order, which is the thing that I'm advising not to do, but obviously, like I said, to each their own. If I decided that I want to, to buy a bunch of Bitcoin, if it gets to 45K or something, then this would be an appropriate way to do it. The range order is the one that's more what I am recommending, which is the ability to create some uncertainty, or at least reflect your intrinsic uncertainty around a particular price target. And what this will do is create a geometric sequence of discrete limit orders spread throughout the range, but in kind of a continuous way. The recurring orders is a way to trade these things continuously versus each other. And then overlapping liquidity is basically a recreation of a standard concentrated liquidity AMM using Carbon's implementation. It behaves exactly the same way, but you can choose a specific bid-ask spread rather than subscribe to one that is given to you. But let's go ahead and look at the range order here. Actually, we'll start with the limit order so that we can have a look at these things. Or you know what? Let's do it instead on the simulator. This is going to be, I think, a little bit more interesting. Okay. So here's our chart. This is going back a year. Let's just take this out maybe to the last 30 days. Okay. So you can see here, basically I just have the price chart versus, for this particular pair. So we're looking at specifically the TBTC wrapped Bitcoin denominated in DAI. This will look pretty much the same depending on which stablecoin you choose. As long as they're all very close to $1, then you shouldn't have any issues. Some stablecoins are more volatile than others, but whatever. Okay, so what I said is that some of my price targets are actually a little bit farther down here. So let's go ahead and move this down. So what I'm looking to do here is to basically find a part on this chart that kind of reflects where I think I would be specifically interested in buying again. And what I've said is that I think I think that we're likely to sort of come back to this level. So if I flip that to just a limit, you can see that if I place the line right here, you can see that there was a very significant resistance level here at around that 52K level. And I think that if we do see, a strong capitulation to the downside, that this old strong resistance is going to be flipped to support. This is generally how these kinds of chart patterns operate. So I would hazard a guess that we're unlikely to drop very far below this level, but it is possible. And if we do, there's more there's more confluence back here, especially this region right here. So let's say that I am, and I'm happy to play the token bear on these calls. Let's say that somewhere in this kind of 46 to 41K range is reasonable, but I don't know, how far into this range we're likely to get. Or even better, maybe I think that it's I'm convinced we're coming down at least to the 52, but I'm not sure how far down towards this 41 I'm likely to go. So I can play around with these levels and decide, what is the interval that I have a high level of confidence in. And then if the price continues down into this region, then I will be, buying a little bit of Bitcoin towards the top of these levels, but I will be buying all the way down until, and I won't run out of my cash asset until the price dips below this 42,265. So this is kind of the level that I would be looking at, and I would probably not even have a sell target, just because I'm not really sure what a realistic price target is yet. But let's just go ahead and say that most people are convinced that we're going to be breaking the 100K level, or that this is a very significant psychological level for Bitcoin. And so maybe I think that it's possible that we'll get very close to it, but not quite exceed it. And if we do exceed it, we won't exceed it by much. So maybe somewhere in the 95 to 104 sort of level. Okay, so let's say that this is what I want to do, but I'm not interested in selling any of the Bitcoin that I have right now, so I'm going to set that to 0. What I can do in here then is say, I'm willing to commit, I don't know, $10,000 to this specific trade. And so what this would do then is enumerate all of this DAI throughout this range, and then allow me to buy it as it moves down to that side. So that's how I would set up a strategy to trade Bitcoin as we're moving into May, which we know is typically a bearish month for all financial markets, not just for Bitcoin. So yeah, that's how I would do it.
Now, this is the simulator, and we had spoken about this previously, right? So you can create any strategy on here, like a recurring strategy, one of the ones that you had spoken about previously or introduced earlier.
Right.
You can do this with I'm sorry.
Go ahead. I didn't mean to.
You could do this with, no, that's okay. You're doing this with the recurring strategy. I know that overlapping strategies are like the overlapping liquidity. This is going to be an option coming up here also. So I kind of wanted to highlight that a minute, but I also wanted to highlight the fact that you chose to, although you're setting your sell range here, you are not funding it at all. You're not adding a budget to your sell range. So
yeah, correct. So what this is saying is that after this DAI has been taken, and I've swapped it out for TBTC as the market retraces, then as this number goes down, this number will go up, and it will be available for sale in the other range.
And it's all automated, right?
Yeah. You don't have to pay gas or anything like that. There's a single equation that describes the relationship between these two numbers, and so as the market interacts with you, whoever is interacting with you is the one that is, essentially reorganizing the way that this liquidity is distributed, and they can only reorganize it according to the parameters that you've set. So it's not something you need to come back and maintain over time, although you can if you want to. You don't have to.
Okay, so go ahead. Sorry.
Yeah, it's you are giving the protocol instructions about how you want to trade.
You said you don't have to maintain it, but you can. How would someone go? Like, say you set your sell range, for example, up at the 95 to 104, something like that. How difficult is it, or what is the process, I guess, for someone who wants to say, you know what, this isn't realistic anymore, or we're going to blow right through this. I want to set my sell range to this. Is that something that can easily be done? Because you had
Yeah.
mentioned maintaining this.
Yeah, so if you can browse the app and see what, how people are trading. So let's have a look at what's this one got? Like $100 in it. So we can have a look at, how people are doing things. And essentially,
Oh, edit price.
there's different categories of action. So all of these sell high, buy low activities or
Mhm.
actions, I should say. This is just people interacting with the quotes, the quote prices that you've created.
Right.
So you can see after a couple of actions, this person decided that they were going to change their strategy. So here, I think they're old. Oh yeah, I can't actually see what their old one is, but we can go and check the block explorer to see that.
It's okay.
But essentially, yeah, they've decided that the prices that they used to have were were no longer tenable, and so they just clicked on their strategy and edited it. So it's very simple. You just give it the new numbers, and it will update.
Awesome. Thank you so much, Mark. We have a couple more minutes, so if there's anything else that you want to highlight in terms of like the actual strategy creation process, I'd like to give you the opportunity to do that.
Um,
Otherwise, oh, go ahead.
no, otherwise what?
Well, otherwise, I had mentioned earlier that your another one of Bancor's products had just made its way over to Mantle. So the ARB fast lane is was developed for a couple of reasons, right? But one of the main reasons is because it takes markets that are created on Carbon DeFi, right? And arbitrages with other dexes that it's integrated with. So right now, Carbon DeFi is found on Ethereum, and there are licensed deployments on Base, Phantom, and soon to be Mantle, maybe with the ARB Fastlane deploying there.
Yeah, you should expect that if the fast lane is deploying there, that it's foreshadowing a carbon deployment in the immediate future.
Yeah. Okay, so this is the order fulfillment. This is how it works because there's no matching on Carbon DeFi, but
Correct.
there's kind of like a built-in bot system.
Yeah, there is no broker, right? So in general, for a centralized exchange, you have privileged individuals who are tasked with matching order flows. And this is something that they will either, benefit from because they're active participants in the market themselves, or they will charge for that service, or what have you. On Ethereum and with blockchains, the idea is to sort of push back against that kind of power structure by building something that anyone can interact with. And so the philosophy in Carbon DeFi is essentially that all that is required is for the prices that people are asking to trade at are broadcast publicly and are easily discoverable. But from a product perspective, there is always this assumption of an efficient market. And in general, it's a bad assumption. Some markets efficient, but most aren't. And cryptocurrency in particular can be very patchy and very granular. And so in order to try and make it more efficient, we've decided to meet, let's say, the passive market participant or even active market participants halfway by developing some of the tools that they require to interact with the chain. So usually, so around the 2020, 2021 sort of period, you would just assume that, oh, there are ARBs out there, there won't be money left on the table for too long. People trade for all sorts of reasons, and arbitrage is as legitimate a reason as anything else. Problem is that when you've got lots of new chains, lots of new DEX protocols, and that kind of thing, the assumption that someone will show up becomes worse and worse, right? Or gets weaker and weaker over time, and this can hurt
Right.
the performance of new products. And so the art fast lane is basically saying, okay, well, how about we we develop that infrastructure and let anyone use it. And that is, yeah, the person who has who is quoting a price doesn't care who who is trading with them or for what reason. Only that the prices that they are quoting are being taken when it seems that the market is ready to take them. And so having an arbitrage system in place helps to make that market a little bit more efficient and improves the execution certainty. Now, having said that, there's no such thing as a price. Like we point at price charts all the time. We say that the price of Bitcoin is exactly this to 6 decimal places, but it's still a guess. The only price that matters is the one that you get after the trade is executed. And this is why I think quoting prices is good, because you know exactly the price you're going to get. This isn't specific to carbon DeFi, although in terms of decentralized finance, it is pretty rare. But yeah, whatever price you want is the price you get. There's no slippage or anything else that you have to sort of worry about. And that's the same on a centralized order book as well. If you're creating a limit order for a certain price, generally you're going to get exactly the price that you asked for, not a penny less or a penny more. There are things like market orders and things that can sort of change the perspective on that a little bit. And I'm speaking in broad strokes deliberately, but you get the idea.
Right. Thank you. It's exciting to see, everything expanding. So again, congratulations. We'll have to, if you would keep us updated, because if this is a little bit of foreshadowing, then I'm looking forward to hearing about the additional deployments on Mantle. So, Koryo, I'm going to pass it over to you. Speaking of different chains and ecosystems and things, we have, Mark ditched, he'll be back. We have spoken about your narratives dashboard, but you have a few different dashboards, and I have been seeing quite a bit about, of course, narratives, right? And I think I even saw you say that we have a new leading narrative right now that kind of took over the meme category. But your other Dune dashboard, I was hoping maybe we can look at that, because I'm seeing a lot more of different chains that we're kind of circling back to that have really seen a lot of activity. I don't know if you've been keeping up with your ecosystem Dune dashboard, but if so, maybe we can touch on that topic a little bit today as well.
Yes, absolutely. We can actually even start with that. So
awesome.
Let me share this. Let me share the screen here, and let me know when you can see my screen.
Got it. There's a lot of us.
So let's go on that dashboard. So it's called ecosystems. So it's actually comparing different chains that are covered by Dune. Not everything is covered by Dune, but most EVM chains and most L2 chains are covered here. And so there are different sections, but 2 sections that I would like to highlight today is first of all, we start with a bridging activity, because even if not everything is, not all chains are covered, but everything starts with a bridge. So you have some assets on, on Ethereum or on Arbitrum, etc., and then you want to bridge on a new chain or a chain that is having more activity. And although that chain might not be covered by Dune, but because you are interacting with a contract that is, taking care of bridging your assets onto that chain, then we can see that activity. And so here, for example, if you look at this chart, we are seeing a lot of blue. So let me zoom in a bit. So we are seeing a lot of this clear blue, which is actually the base, L2 channel. So, we had in 2023, you remember when Base just launched and there was this frantic
right.
social DeFi. So this was Base did really well, and then it had some calmer periods later in 2023, but then it's picking up in 2024, as you can see here, with activity going increasing quite actually in a strong way, as we can see here. And we know that now there is a lot of new tokens and activity launching. Now, this is a good introduction to the second part of this dashboard, which is new listings. So why new listings is relevant? Because as soon as there is a lot of activity or a lot of attention on a given chain, people and degens and traders, they will start to bridge to that fund, to that chain, in order to find some good opportunities and maximize their profits. And this also means that some other maybe people on the other side, maybe founders or people launching projects, they want to take this as opportunity, and so they will launch new projects on that chain, and that could be meme coins. Most of the time, the quickest to launch are meme coins because they can be launched in 10 minutes. But also, as soon as there is liquidity, etc., some more established and serious projects can consider that. And so what are we seeing here in this section? We are seeing the number of new tokens, the number of new, ERC20 tokens that have been listed on different chains. Recently, I think this is showing the last 3 months. And so you can see that Solana, is
Wild.
has a wide number of token launches, and we know that everybody was and is still talking about Solana, and there were like thousands of meme coins launching per day on Solana, and so that's why you see these numbers. But this shows you actually that there is a lot of attention on Solana. It shows it in a in a different way, and maybe it's a different angle compared to looking at users and number of transactions and TVL, etc. This is yet another metric that has its own merits, I think, especially for people who are into trading. Because we know that usually the newer projects or newer token launches get more attention, and so they also provide some opportunity. And then followed by Solana is Base. We also know that Base, has is kind of now, has a lot of opportunities and has also a lot of potentials, because we are talking about Coinbase, actually kind of one of the biggest exchanges that is providing this, UI for every Coinbase user to be able to, do on-chain transactions through Base layer 2. And interact with dexes, etc. So there is a lot of potential, and we are seeing it also in that number showing up. And interestingly, although if you look at the price appreciation of some of these tokens, like Phantom, for example, that has had a good run lately. So if I look at Phantom, because they have this Sonic upgrade, etc. Just in the last 2 months, it went up almost 4x. But
wow.
in terms of DeFi activity, we were here. There aren't, at least we can say, there aren't a lot of new token launches, which probably means there aren't yet a lot of meme coins and new projects, etc. It might be lagging, so something to consider. Of course, this is one metric among others, but we are not seeing that yet. And so as for traders and people who are into short term catalysts and risky plays, it seems that still Solana and Base are providing the best opportunities. And then another thing that you can do is actually you can look at how the gas price is evolving across time on different chains. And so here you can see Ethereum, of course, which has very expensive gas price compared to other L1s and L2s. But there is an interesting pattern where you can actually see, because the gas fee is determined by the supply and demand, and the more on-chain activity there is, the more prices go up, etc. And so there is also alpha in considering, like, if gas prices are too cheap, maybe there aren't a lot of people on chain, or they are not doing any transaction, probably because the market is quite either bearish or is just ranging and nothing interesting happening. And this usually is a good moment to buy historically. If you look at gas prices and you compare that to Ethereum price or Bitcoin price, this is a good time to buy. And conversely, yes.
If I can just ask a quick question, you were looking at Phantom one screen before this.
Yes.
Last week we talked about. I think you had mentioned that, like, you could see them; they're moving left up the rank or right down the rank.
Yeah.
How has Phantom's performance been over the past couple of weeks? Is it moving left or is it moving right? And
So
why? And do we know why?
Yes. So first of all, yes, it was actually the best performing L1 of the month, Phantom, last month. Now we are on the second day of the month, and we see actually a reset here because we are seeing MTD values. But if we go actually on the layer L1 sector here, we can see that most of these surrounding things are at least recently against Bitcoin going down, but you can see that Phantom is clearly going up. Here we are looking at March, and everything almost is going down. And Near also had a good moment, but almost everything else is going down. And if you look at the last 3 months, so Phantom in the last 3 months, Phantom is the second best performing L1. And so this is a recent thing, which means that if you look at this chart, like 1 month ago, Phantom wasn't here. Maybe it was around here. And so we talked about this move to the left, and this is a confirmation, another confirmation that this has happened on Phantom, and probably Near is somewhere not very far from here. And this is also why I have the last 3 months, because here, and if we look at the yearly chart, YTD, we see again here from 1st of January this year, Phantom is the second best performing L1, the first one being Sui, and we can see that there are very few that are outperforming Bitcoin, this year, but Phantom is one of them. Phantom is one of them, and Near is also one of them. So again, these are catalysts that and why you mentioned why? Yes, because they have an upgrade, and there is this Sonic upgrade that will make it very competitive in terms of scalability, and that potentially could become as scalable as Solana. And so this is the promise. And also Near, we talked about Near. They are going on different narratives from data availability. So now Near has a data availability. They are also going through building stuff on the AI side of the things, and also about the concept of chain abstraction, interoperability, etc. So these are all things that pushed a Near higher, and also Phantom. And so usually, if these outperformances that you see, they are not random, right? They are caused by something that now needs to be priced in, and so this is what explains the performance that we are seeing on Phantom. Now, so that concludes what I wanted to say on the ecosystems. Is usually you can see, even in the peak of the bull market, we have always the highest prices in gas fees, and that just on its own, independently of what's the price of Bitcoin, what's the price of Ethereum, where is the resistance, where are we in the cycle, etc. If there is a point where a transaction on Ethereum costs an amount that is very high for an average user, above $100, etc. Historically, then and this indicates high activity. Now, this is just a very general framework. Of course, things are evolving all the time. We have blobs now since recently, and the scalability that is being built on, and we had proto-dunk charting. So all these things affect the gas prices, but still, because it's based on supply and demand, we can see kind of these up and down moves that can be used for traders who are into using on-chain data for for their systems and their tradings. Now, I can come back to the to the narrative dashboard just quickly. We can see that. So we said that we are in April, so we are just seeing 2 days of data here but we know that since Monday we had bearish price action. We can see maybe for the first time this year that I'm seeing something like this, where everything without any exception is negative. So all narratives in the last 2 days have had a negative performance. Some are down around 20%, some are down just few percentage, but everything is negative. And so you might actually even find good opportunities here if you compare some of the best performing narratives of the year, which usually they have a strong trend. For example, the AI narrative. And you mentioned, Jen, about this RWA, which was the best
Yes.
performing. Yes, the best
That's the one I
performing
saw
narrative.
too. I saw your tweet. Sorry.
So
I think there
just for
might be a little
clarity,
bit of delay, but I saw that and I was like, oh.
just for clarity, Koryo, you're saying, if you focus on what was the strongest, all the narratives are moving south right now. They're all moving negative. But if you
Yes, in
focus
the
on the
last 2
ones that
days.
have been the strongest, they're likely to be the ones that are more resilient.
Absolutely. So we always say you should bet on strength, and you should follow the trend on what's going up. And so the trend is clear. If you look at YTD numbers, memes for sure have had a good year so far, but real world assets are the second best performing narratives of the year. Last month, as you can see from the history of narratives, they were the best narrative, and this is the first time that it has ever happened. And never so far we had RWA
And is
in the
there
first
any
position.
correlation between what are the weakest narratives right now in this downturn versus relative to what were the weakest or strongest ones, a week or two ago?
So the weakest one we've had are, real yield, perpetuals, NFTs. So NFTs are continuing to have a bad year or bad period overall. But these other ones are, we've seen them regularly, among the worst performing. So here, for example, you see perps. It happens often. So no other correlation than that. The ones that are performing well are usually staying every month among the top ones. So Bitcoin narrative, RWA, and AI. AI is very strong. So I have also just recently, like few days ago, I did a dashboard, a dedicated dashboard on AI narrative, which is a work in progress, but at least there is now almost 200 projects, AI related projects that I'm, at least I have here on my dashboard. And now more on-chain data will come here to, cover this, because there are a lot of subsectors. You have, decentralized GPUs, you have the training side, you have the inference side, you have GameFi using AI, you have, large language models, etc. A lot of, probably one of the most exhaustive and complex narratives out there, the AI. So that's why I started this recent dashboard on it. Being a data scientist is also one of my areas of interest, of course. But let me actually go on the charts, and we have just few minutes.
Koryo, really fast.
Yes,
That is
yes.
impressive. I felt my
Mm.
eyes kind of bug out of my head because it was like, there is, I mean, honestly, like I talk about it all the time and I'm always like, it's so amazing to have the three of you guys together and sharing these tools and things that you use to kind of guide your trading. Or, like Mark, like you might not be actively trading. I think you are, but, to like have carbon DeFi, to have material indicators, to offer, like you gather all of this information and just make it available to everybody. Like this is serious.
I gotta say, thank God for data junkies like Koryo, because this is mortal humans don't do this kind of thing, right?
This
I
is
mean,
serious.
I just a lot of respect and admiration for the amount of time and energy you put into building this, because this is just a phenomenal
100%.
resource.
Yeah.
Thank you, guys. Actually, I might say that I'm probably lucky because I was into data before joining Web3 and crypto, and that's probably, I already had this data side of me, and the passion for data and finding insights on data before joining crypto, because once you join crypto, then there is a lot of things going on, and it's hard to develop these kind of skills once you are there. But yeah, so I'm happy to provide these dashboards and have this feedback. I would like to conclude with maybe another dashboard, which we've since we had the YouTube screen sharing, I've never shared, but it complements, I think, pretty well what Keith was saying on the perspective of the market. So it's we are seeing in gray here the price of action of Bitcoin now. We went all the way up to 73 something, and now we are back around below 70K. And so this golden line here is showing the performance of altcoins compared to Bitcoin. Somehow we can think of it a bit like this. There is more things going on. There is on-chain data. You know, we talked about gas prices and this kind of stuff that is also integrated somehow in this. But what I would like to highlight is, you know, usually we so here we are, it's a, you know, buy the dip kind of zone, or or cycle bottom kind of zones below 10 on this indicator, and above 90 is kind of market top, which we can see actually happened, you know, in 2021 here and also here. Although it's not very easy to see from the Bitcoin price action, but you know, there was a very strong alt rally in 2020 as well. And then you can see actually also in 2022, we had several times, and as well in 2023, where we went below 10 for the indicator. And these were in very, very low prices. We were usually, most of the time when this happened, we were at 17K here, you know, and other times here it happened again, 25K. So if you had used this system so far, at least, you know, it provided you with some good entries. But regardless of that, what I wanted to highlight is we are currently here. But although, you know, and look at this divergence between this amazing performance of Bitcoin and this weak performance of, you know, the alts
Right.
in general. And so, and this indicates to me at least the upcoming upside potential that we have in the long term for alts, because we are actually, at least based on this system, which might not be perfect, but at least it shows historical, you know, pattern of what how alts have performed against Bitcoin. We are not very far from the bottom, and so and we can see it actually on the Bitcoin dominance, which is very, very high in terms of, you know, its historical, at least in the last few months. You know, you can see that Bitcoin dominance is very high. If you look at the weekly chart, you know, since the last bull market, we are, you know, at very, very high values, and it's not going down. And so usually this means that, you know, when the bull market comes and after the halving, etc., this will go down in the same way that it happened here, you know, in 21, and then that's where alts will start outperforming Bitcoin, and then these things will go up. But it can go up very quickly, as you can see here. For example, it happened, you know, from January 2021 to the top. You know, it happened in 3 months, so it can go from bottom to top. And also in the other direction pretty quickly, but this is bullish to me because, you know, it shows the upside potential that we still have in the upcoming month and post halving.
That's pretty cool.
It's very cool.
Pound for pound, there's more alpha in this hour than anything you will find anywhere.
I know. I keep saying this, and I don't know if, I mean, maybe that's why I'm kind of losing my voice here, because I'm trying to like get this out so hard, because every week I sit here and I'm like, there's so much everybody can take from this, you know?
Sure.
Thank
I
you guys
agree.
so much for doing this with me every week. I absolutely love it. I know that we are helping traders and, you know, even liquidity providers, Mark, kind of create these different sorts of strategies, gain this sort of knowledge, you know, kind of build the confidence, I think, even to use these sorts of tools, because sometimes on their own they can be a little bit intimidating. So really just thank you guys so much for doing this with me every week. And thank you to all of the listeners also for tuning in. I say listeners, we're actually live now.
We have
and
viewers.
We have viewers for tuning in. We will see you all next week, Tuesday, 3 p.m. UTC. I know everybody else in the world other than myself had a time change. So any confusion, you guys all like reach out and let me know. Thank you again, everybody.
Thank you. Great call as always. Thanks, guys.
We'll see you next week.
Thank you, guys. Bye-bye.
Thank you.
Bye.
We'll see you guys.
Bye-bye.